Welcome to Impact Investor Podcast. Today, we're joined by Colin Webster, a rock star in deep tech investments and co-founder of Risk Capital. You do not want to miss this episode. Colin reveals how to use your first product as a stepping stone for something greater, solving real problems, unlocking sustainable growth. Get ready for an actionable advice that will transform your approach to entrepreneurship and investing. Colin shares his battle-tested strategies for building businesses that thrive for decades, including the importance of pivoting to meet customer needs and how to create a business model that delivers long-term value. Tune in now and discover the secrets of making your business unstoppable. Welcome back to Impact Investing. Today, we're joined by Colin Webster, the co-founder of Risk Capital, a pioneering force in the deep tech investments. With a legacy of founding multiple companies and achieving remarkable returns, Colin is now driving innovation in Canada through strategic investments. Let's dive into the world of impact investing with Colin and explore how technology can create a lasting change. Welcome, Colin. It's great to have you here today.
Thanks very much. I appreciate being here. Thank you.
Well, we're super excited to talk with you because in all of the conversations that we get to have with investors, founder investors, people that have actually gone through all spectrums of the entrepreneurial journey, is the fact that you're on boards, you're investing in companies from an angel, from a venture. You've done so many great things. You've been in the driver's seat all the way along. And there's some great areas, but one of them is deep tech, which is really a place in my heart. Being an ex-engineer, I just love talking deep tech, and I don't get to do that very often. So today we're going to do that. But before we kick off the show, maybe you can share one thing about you that nobody would know, and then let's dive into your past and all the great things that you've been able to accomplish over the last few years of business. So I'm pretty excited to learn more. But one thing about you that no one would know to start.
I guess one thing about me that no one would know. I mean, my first entrepreneurial experience, kind of out of high school, I moved to England when I was 16, 17, finished high school in England on my own. I wanted to go to Oxford, so that was the way in. You couldn't go from a high school in Canada to Oxford. You had to go from as an English student, or you had to do a degree or something like that. And I got there, and of course I'm 16, 17 years old, and the first thing I do is try to order a pizza, because from Toronto I would have pizza or whatever I had. And there were no delivery pizzas in London. I was like, oh my God, how am I going to eat when I'm living here by myself? And so then I started formulating, like, this is such an obvious hole in the market. Why don't I build a pizza company? So while I was living there, I sort of put together a sort of business plan, talked to my dad about it, and worked on the whole thing. And then eventually it came time to either decide whether to build that company or go to university. And I ended up, I asked my dad, I said, what do you think I should do? Should I go to university or build a company back in England? I'm like 18 years old. And he goes, I think you should build a company. And so that kind of put me in the position of like having to really decide what I wanted to do. And of course, I thought you build a company anytime, but you got to go to university at a certain age, more or less, if you want to be, part of the group. So I chose university over building a company, but I had the spider sense early in my life that I was going to be building stuff.
That's a fantastic story. And I love the fact that you took the risk by yourself at an early age to make that leap. You were already entrepreneurial. You were already diving into where there were gaps in the market, gaps in the world. You had support from your father, which is incredible. Most people are afraid to start something because they don't know how it'll end up. So you had that push from your father. But I think the overlapping win there was that you went there for a reason, which was Oxford, and you went for it. So I think that's just as powerful as starting that pizza company, was the fact that you delivered on what you said you were going to do. So that's pretty amazing.
Yeah, that's great.
Perfect. Well, now I think we got to dive into not just that story. There's many stories. So I'd love to learn more about that venture. So once you finished Oxford, what was the drive going forward? What were the things that you jumped into business wise, and all of the things that you ended up completing to get to where you are today?
So in fact, I didn't end up going to Oxford. I got into the interview process, which is the acceptance kind of thing. And then it becomes a situation where the tutor has to choose which students qualified who he wants to tutor. And I wasn't chosen. But I went to Princeton, so my backup was Princeton University, which is a good university. And then, for me, I didn't really know what I wanted to do. It's very specialized in Europe for university, so it was more of a general engineering education in the U.S. and worked out well. And so, but out of school, I knew I wanted to do entrepreneurial things, but I didn't know very much about building a business or anything like that. So I started working for different companies to learn as much as I could. I mean, I can't remember the order, but I worked for a shipping company, and I wanted to get back to Europe. I like Europe a lot. So I worked for a shipping company. I worked for NCR doing tech support. I wanted to work for big companies, small companies, just to sort of learn all the different aspects. And I worked in different parts of the companies. And so then, I launched my first company as a nonprofit. So I kind of my career kind of took a very conservative route. I kind of dipped my toes into a nonprofit where I couldn't go that far wrong. Then I started building tech companies. So I had to learn everything about that. Then I started angel investing, dipping my toes in that. Then I VC. So I kind of gradually got to where I am, but making sure that I knew what I was doing along the way. I didn't want to just dive into something not knowing, and especially, managing people's money, my money, or whatever. So that's generally what I've done. But yeah, the first thing out of university was working for large companies, just learning what I could.
So when you started to look at and analyze, just the point when you were 16 and said, I wanted to go to Oxford, you had a plan and a goal and you went after it. You moved on your own and you started to do this. And then of course, you ended up in a fantastic school regardless, which is incredible. What was the motivation to it? Like, you had a plan. I don't recall, I can recall a story about me in the UK, which was as a young, I guess, young adult. I had the opportunity to, I was playing football, European football.
Oh yeah, right.
And I was offered the opportunity to go play Division 3 in the UK. I had no idea, never traveled outside of Ontario. Maybe the farthest I went to was probably, I didn't even think I went to other provinces. So I had this fear. I didn't know, couldn't do that. I played hockey, so I ended up playing professional or junior hockey. But the point to me was that there was a fear, there was an unknown, but it didn't challenge me right away. And I didn't say I needed to be here. I was kind of just trying to feel my way around. Like you said, trying a million things to kind of better understand who I was. And you knew right at a young age, I need to be here. What was that driving force that got you to say, this is the school I want to go to, or this is the country I need to be in? What got you to do that, and what got you there?
Yeah, I mean, I've always been super independent. One of five kids. When you're a big family, you kind of have to learn to be independent at a younger age. We actually had, as a family, spent some time in Europe already. So my dad had a business in Europe a little bit. He took us to Switzerland when I was 10 years old. Went to local schools there, learned French. We kind of had this. I just really it was Europe just was calling me, basically. And Joseph Campbell, hero myth, follow your callings. It's kind of like one of my, values in life. I went to Switzerland for a year out of grade 7 in high school in Toronto, and came back, and I was completely transformed. I mean, I had, much more self-esteem, much more confidence. Grades went up, everything worked really well. And so that was a really good experience. So I was sort of thinking, how do I get back there? And so for summer jobs, I would figure out if I could go back and work in Europe for the summer, continue practicing my languages. I just sort of liked it. I just wanted to be over there. So that was just another mechanism to get me over there.
So it was creating that independence.
Was that?
Was it creating that independence? So as you were kind of learning where you wanted to be and what you wanted to do, that drive to be independent. And of course, Europe is brilliant. It's an amazing place, and it's so diverse across so many countries. There's a lot of that, but it's that independence. So does that independent freedom also be able to start creating this urge to start creating companies or solving problems? Because in order for you to create all these companies, you had to solve many problems because you were doing many companies. It wasn't just one.
Yeah, I kind of see it as a sort of a risk-taking mentality. I mean, I didn't mind taking a risk. I didn't mind going to Europe and not having it work out. I didn't mind investing in companies and having it not work out. And early stage venture investing is the same kind of thing, where or no, actually, early stage venture investing is not as risky as people think because you're diversifying across the platform. But starting a company starting a company from scratch is very high risk, I think. And so, but I've never had a problem with that. Like, I can just tell the energy around me, especially in Canada, people don't take the risks because of the fear of failure, you lose. I mean, if I go back to zero and have to start all over again, no, I have no problem with that. I don't mind. I can do it all over again. I mean, I guess I kind of have that, sort of a confidence about, being able to work hard, being able to focus, and making stuff happen. And, I don't know where it comes from. It's just, my dad was venture capital as well. So he took a lot of risk as well. So we kind of learned that from him. And he was a legend in Canada in venture capital. So, I grew up with it and sort of in my blood.
No, that's fantastic. And I think it drives a lot of your demeanor and how you approach things, but it's also that risk, problem solving, and being able to take that first step forward, which I think a lot of people want to learn from. If Canada is a whole country full of tree hugging people, the government kind of does follow that mentality. They want you to be government dependent instead of figuring out how can I survive in risk. When you look at the US, they're very much built around capitalism, which is we're not here to hug you. You're here to survive. You're going to do it yourself. We're going to offer some things over here, but you have to fight to get that something over here. And we kind of have that different structure between Canada and the US. So I guess as you start to take
a lot of safety nets in Canada, right? I mean, people, we've become a little bit complacent with all the safety nets.
Exactly. So it's cool that you took that risk and that you came back and probably have bounced back and forth between the two countries and being able to keep challenging yourself. If you go back to Truition and the companies that you have built, are there, like, say, 3 or 4 things that really stand out in your first company versus the last company? And then I don't mean the last company as in the venture firms that you've built, because they take a different approach on how you're tackling and solving problems through financial means. But if you take the first company versus your last, are there a few things that really stood out that you focused on differently in your last company than you did on your first? The first company, you're kind of feeling your way, learning. You still were successful, but are there things that really stood out? You said, you know what, next time I do this, I'm not going to do this.
Yeah. First company I did was a nonprofit, and it was 1995. And it was a company I came across couple of things. I think I saw in the news some kid in the States somewhere getting leftover computers from corporations and then giving them to charity, and I felt I needed to fill that, work on that niche here, and so I set up a company called Reboot Canada. It was a nonprofit, and hired a couple of people, and we started the first order. We got 100 computers from McCarthy Tatro law firm, and then we didn't know what to do with them, so we put an ad in the paper and we just gave them to charities. And then, but what I did learn about that, which was interesting, I was seeing a lot of charities go out and raise money to sustain themselves, and go out and raise money, and then that works. So they go raise a bit of money, then they get to spend the money on charitable work, and then of course they ran out of money and they got to go raise it again. And all those charities I was looking at were eventually going out of business because either the donor stopped giving or the people who are raising the money moved to a different firm, and the turnover in that area for sustainability wasn't designed properly. So I realized early on that it needed to be a social enterprise. So we needed to have a sustainable business model. Otherwise we weren't going to survive. And so instead of giving away the computers for free, we ended up charging people $25. It was really interesting when we went to a charity, and we'd say, how many computers do you want? And they go, oh, we could use 15. And they go, oh, but they're $25 each. And they go, oh, we only need 4. Because 20, even though it was no money, they had to go through a process. Someone had to approve it, as opposed to, hey, just give me 15, just walk over and get. So what we realized, which was a very good thing, to give the right number of computers out, we charge a small amount of money. But then that small amount of money became, I think it became in the end $50 or $100, and that was enough to sustain us, because we were getting thousands of computers for free and charging $100. We'd fix them up a little bit and get them out, and so created a sustainable business model. And so that's why 30 years later we're still around, and because we would never go out of business with that model, because we're making money all the time, and then we can make money by recycling the old material with recyclers. So that was a really good lesson on the positive side. And then my next company was a for-profit, which was Truition. We called it eDeal at the beginning. It was online auction technology. And we just, so that was the lesson there was, we had this, I thought online auctions was a great idea. I mean, much, fixed price stuff happens in the real world, but in the online world, when you got lots of competition, you can sort of price manage and dynamic pricing and stuff like that. I thought that was super interesting. And but of course, the first lesson was we started competing as a venue like eBay, and unlike Coke and Pepsi in the online world, it can be just eBay and nobody else. I mean, because everyone can get there. Not everyone can find a Coke and a Pepsi walking down the street, depending on who's selling it and stuff like that. But on the online world, anybody can go there. So if you're competing with eBay, a giant, then it's not going to work. So so that was a good lesson. And then we morphed into a company that supplied online auction technology to other companies. So NHL, for example, that would sell their leftover game worn stuff or whatever on eBay weren't getting great prices because mixed in with their authentic stuff was inauthentic stuff. So they needed an auction platform on their website to sell their stuff authorized by them, and their price points go up. So did Dell Computers, so did a whole bunch of European companies. And so that was the model. But interestingly as well, I started the company with the idea of online auction technology is super cool. So let's build a company. As opposed to finding out, which I do now, it's finding out who wants to buy it. Like let's find out where the market is, and then who really needs it, and then how big is that market, and who needs it now, and how competitive it is. So I look at it a little bit differently now. I would start anything, and I see lots of entrepreneurs. You find something that you think is really cool, and you start the business, and then you start finding applications for it, and that's kind of the cart before the horse, or the whatever the.
No, I like that, and the learnings that you've tied into it. There's a bunch of things that we can unpack there, but I think the first one is that you found a sustainable model that allowed the business to survive for the last 30 plus years, because you looked at this and said, if I buy from Paul and give to Peter, and I charge something in here, and I listen to the market, and I keep it super simple, there's nothing complicated about it. I take in free and I charge X to give out. And that's the model. There's not a Google ads campaign that's running over here. And it's not this buy this device here. And then as you started to learn, listen, and grow, you started to say, well, we can make a few more dollars if we start selling parts, or if we rip this apart and sell this gold or this material, we can get X out of it. But that came as you grew the business. So I think the real lesson here is that in any business that people are creating, they need to focus more on the sustainable side. How can I find something super simple that will convert, that I can get behind and make dollars from, and allow the business to sustain itself without having to go raise millions of dollars, chase ghosts, and get nowhere with it, because it's not really that scalable. It really doesn't need to be. And I will let this business grow and create really strong value over the next 30 years.
Yeah, the number of great for-profit businesses that run out of cash, even though they're great businesses, but they haven't built the model, they haven't got sustainable thing going or whatever. It's too bad. If people could think of it that way.
It's I think there's a bit of a shortcoming, because if only 3% of companies, it's actually one, but you put angel investing, so maybe it's around 3% of companies are actually funded by venture or angels in all companies that are started, yet 99% of all businesses chase this dollar to pitch to offset. And if they just spent less time trying to chase the money and figuring out, how do I build this sustainable model? And it goes to your point earlier, which was that as I started to look at the business, I just wanted to create this great this great site that allows for me to auction this stuff. You weren't being caused by dollars. You weren't being caused by problem. You were going to learn the problem while you were in the market. And that came because of the time you were able to spend. So you just said, okay, I'm going to build this. And while I'm learning, I'll figure out who the buyers are and who all this is. I'm going to take the time and put this cool technology out to market. And then you were able to build a great company from it, because you started to morph yourself into the real problem. Whereas today, as you said, you changed that idea and that concept to, I'm going to figure out beforehand where the market is and where the opportunity is, and then build a product that mirrors into it. And maybe that's because today it's a little bit more viable to do that. You can build things quicker than building something and hoping they come. So it kind of fits that. But I think it's brilliant because as you started to learn the market, you can start to ask questions, find people that want your product, and dive in. And that could take 6, 8, 12 months, but you're doing all the legwork. You're literally out there knocking on doors to figure this out, and you're plugging your product into that need and shifting it.
Yeah, and it doesn't cost anything to do that either. I mean, a good example is the next company I did was a company called First Coverage. It was a fintech. And me and my partner, what we did is we built, those days it's pretty innovative on like PowerPoint or some kind of like, we built a wireframe. It didn't cost us hardly anything. But when we brought it up on the screen, it looked like a piece of software. And it had buttons all over the place, but only one button would work, and all it would do is take you to the next page. But it looked like you click the button and the software is working. And we had this demo designed, and it was just there was not one line of software. And we went to these companies, fintech companies, and we'd show them. And we'd say, "Here's the demo. This is going to do this for you. You click here, and it goes here. Click here, it goes here. Click it." And they would go, "Yeah, we'll take it." And we go, well, we're just finishing the software development. We haven't quite. We just got to fix a couple of UI things or whatever. That was the term was vaporware back in the days, and we would say, yeah, we're just give us a couple more months and we'll have it on your desk or whatever. And then we would go and hire the guys to develop it to kind of get the thing to work. So we got these customers and LOIs first. Then we went to the venture capital people with the LOIs. They gave us the money to hire the developers to develop it, which was completely opposite because everyone else was, and still today, they go and develop a piece of software and then they go start demoing the piece of software. And it's like, you don't have to do that. You just demo the wireframe.
Agreed. I love that. It reminds me of when I started my first company. I went to the agency and I said, hey, here's what we can do and how we do it, and showed them it was more of a service style business. And they were like, this is great. Can you send me some financials on how this would work? Oh, yeah, no, send it along. And then didn't hear anything. Then I get a message. How come you haven't followed up? And I said, well, I didn't know that you had an interest in what we were doing. And he's like, yeah, why don't you come in next week? I said, okay, perfect. So I went in next week for the meeting, and I show up and we sit down and they asked me a few questions. And I said, yeah, this is great. Yeah, okay. Thank you for your time. They said, no, hold on. We want you to meet the rest of the team. They called the town hall and I walked in and they introduced me and they said, hey, this is the new digital provider. They're going to do all this stuff. And I was like, what? And then all of a sudden I was like hired, and I didn't even know what I was like, wow, that's impressive. I don't know what to do. I went home and had a panic attack because I just got introduced to 100 people that I was going to be building this system. And I didn't even know what I was at the point. I had no idea that this is what they needed or what I was doing. So yeah, it works that way. And to your point, I think we missed the fact that tangible item of being able to get in the door and being able to understand what people are really going through and the problem that they need to solve. And some of them are going to be more immediate than they will be, obviously, in the long run. And I think to your point, as you started to dive into these, you shifted the way you were approaching each time you were solving a problem. Sometimes it was your own problem that you morphed into the market, and other times it was other problems you saw and got that going and found a way to tether that into other businesses as you built. So in this process, as you were doing this, and it sounds like a lot of the time the traction would come through these interactions. How did you start to scale these types of businesses when you were solving, say, taking the auctioning software and getting in front of these people? Did you have to build more internal process before you went out to market? How did you start to scale these businesses so that the rest of the market figured and knew you were big, or that you were going to be in a better scaling space? What were some of the tactics or the ways you got around that?
Yeah, I remember a point when we were doing our online auction business that once we got to below 25 people, you didn't have to have a lot of infrastructure around, communication, for example, for the team, because you just run into people in the office. You have 5,000 square foot office. It's a water cooler. You just, we're having a drinks thing on Friday. Everyone knows about it. You don't have to tell anybody. But all of a sudden, we went from 20 to 30. We crossed what I consider the 25 person barrier. And as soon as we hit 30, it was kind of like, oh my God, I didn't hear about the drinks party on Friday. No one told me about that. And I was like, well, everyone knows about it. How come you don't know about it? Well, I was working. I don't know. Wasn't. So all of a sudden, we hit that with a 25 person thing. And we had to start building like a we didn't have Slack in those days, but we sort of had to start building, communication methodologies and, looking after people, like, HR, managing HR a little bit more, like making sure people are taken care of properly. You start having to add in these things. And that's another thing that people don't understand when they have a small company and then they say, oh, here's my projection in the future. They don't appreciate the cost of adding bodies that they don't need at that small scale, right? And so adding more bodies as you grow is not intuitive for a lot of startup people. So, and then there's other things that start happening at 50 and 100, and then you have different locations and the taxes, or if you're going cross border and all that kind of stuff. It was much more expensive in the old days. But yeah, you just have to, you kind of learn those things as you go along, and or you can hire some gray hairs that's when you're growing and scaling your business. But I mean, it's all about the learning, right? I mean, you just look at this as like, I'm learning how to build a business, and I'm like everybody else, and you don't, the learning experience is the fun part, right? I mean, that's what you want to, that's why it's so much fun, is that early stage stuff is great because you get to learn how to manage. That was another thing too, how to manage lawyers. That was something that I have to teach that over and over again, because startup experts, startup founders, they're quite good at what they're good at, right? And they always have a few gaps. I mean, they don't know sales, or they don't know accounting, or they don't know legals and stuff like that, or some do, some don't, and they all have little holes. And you kind of have to teach them a little bit about those real world things that they haven't picked up. And it's actually way more difficult in the area I'm in right now, deep tech. Most of the founders are PhDs, and they know very little about business and the nuances. So we have to really screen and manage that process.
Are there
differently from regular?
Are there certain pieces that you look for in an entrepreneur now, because you've done so many, you've scaled companies, you've had a lot of people work for you, you've understood the communication side, but a lot of it to this point is that when you went from 20 to 30 or 30 to 100, there is a lot of process that's enabled in there. And I think that everybody's always backfilling. I raised new money to fill the back hole that of crazy stuff that we did, that we lost a lot of money. So we keep backfilling until we get to a point where we can start to clean up and balance out the company. Are there things that you look for in that CEO, like that you want them to be? They don't need to be your top salesperson anymore, but they need to be really good at being strategic, or they need to be really good at process oriented, because they're going to need to fire someone, or they need to clean things up, and that they have that ability to see that outside of the box or inside the box. Are there certain aspects that you start to look for now because of the learnings that you've gained over all of your companies?
Yeah, I mean, I mean, founders are so important because, a lot of companies, especially early stage, they pivot, right? And so, they can be onto something, but then they have to be able to be flexible because that product might not work or whatever. And some founders just are too locked in to one thing, and so you have to have flexibility, you have to have balance, you have to have the ability to tell a story, to get along with other people, like those kind of things. But a lot of it is business sense. It's kind of like, I've got an entrepreneur, and he wants to charge, not a lot of money to his customers because he wants to be a nice guy. And it's kind of like, no, I mean, you're an engineer, and you know what it costs, and you know what things people pay for, and you don't want to charge them double. But the business minded entrepreneur, it says, yeah, if say they like, I don't really need to charge them double. I can charge them at a good margin, 20% or 30% or whatever. But the opportunity situation comes up where they say, hey, can I have this done really fast? One entrepreneur might say, yeah, I'll work day and night for you and charge you the same amount, because that's because you need it, and I'm going to do it, and this is my pricing, and so I'm kind of locked in. But the smart entrepreneur will say, yeah, I can do it for you really fast, but it's going to cost you more. Is that okay? And then usually, of course, they're going to say yes. But some people, that little mini leap is not available in some entrepreneurs, especially the science-based ones. So so what we do now is when we're talking to entrepreneurs about investing in their company, we really screen for whether they can get out of the lab. I mean, most of the deep tech stuff we're doing right now is invented in a lab somewhere. And when they say, hey, when they come to us, and they say, hey, I want to build a company. Can you give us some money? And I say, well, are you okay building in the business and not tinkering in the lab? And the answer is yes, because that's what they know they have to say. But we have to really screen for that, because we see a lot where they say yes, and then you say, okay, now you got to build a company, but they're spending all their time in the lab because that's what they love, and no problem with that. But you can't build a company spending all, if that's your love and your passion, and you're not passionate about accounting, you're not passionate about legal documents, and you're not passionate about other things, which is completely understandable. You're not going to build a good company that way. So we have to watch out for that now more and more. Yeah.
Well, it is very important into the way you guys are breaking it down, especially with in lab or engineers. You know, I can recall when I was an engineer, it was difficult for me to switch over. And I remember when I did switch over, someone had asked me the question, um, "What do you like about engineering versus business?" And I thought about it and I said, you know, in engineering, I can spend days trying to solve a problem. In business, I can solve it in minutes, seconds.
Yeah. To make a decision.
Yeah.
Yeah.
And I said that I like that part, but I also enjoy the tinkering around for 5 straight days and 24 hours a day and not sleeping, because I love that. That's the passion. But the problem solving in me was like, I'd rather solve something in 5 seconds and spend 5 days. And now you take yourself out of that and you have to say, okay, well, I can't be the one solving this problem. I got to hire people and I got to hire this talent that's going to solve the problem, and they can do it in days, and I can do the 5 second analysis and give that feedback. So you're right, it is a very difficult position to pull yourself out of something you've been doing so long and you're so good at, to say I can be better at something else. I just need to take an outside view and look in instead of always being on the inside.
Yeah. Yeah.
You know, you mentioned this pivot side, and I think this is kind of crucial to a business, is that, and because you've come at this at so many different angles, you're attacking a problem, and you either did it from building it and then seeing if people wanted it, or see if people want it, and then as you pivot, how do you see engineers, businesses, and especially in deep tech, how are they able, and are they able to adjust their mind to that this isn't their problem they're solving? They're solving a customer's problem. How do you start to engage in that and start to help them let go of their own hypothesis of what this is trying to solve and listen to the customer, so the customer's feedback turns them into a buyer of their own product in the sense of what they're looking for, not what they internally think is the solution?
Yeah. 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 No, I've come across this a few times, and yeah, it's I remember one company, they had I can't remember what the full vision was. This is a long time ago, but they had this great vision of like maybe something like a PDF or something like that, way before, like decade before PDF or something like that. And they pitched it to a venture capitalist, and the venture capitalist said, "Well, you're never going to make, like, the problem you're going to have is you're missing the piece called, it was really early days, called a printer spooler. This is back in the 80s, I think. And it says, we don't even have a printer spooler in the market or in the world, so you can't achieve your thing." And they said, "Oh, well, we can make a printer spooler." He goes, "Well, no one's been able to make one before. They're really complicated." "Oh, well, we can do that, but it's not to get to our, if that's what we need to do to get to our vision, then we'll do that." And the guy said, "Look, if you can make me a printer spooler, I can sell that to 1 million people." And they were like, "Okay." So they just built a printer spooler. No interest in building a printer spooler, but they had the ability. They knew enough about the tech around that to build a printer spooler. This is early printing and page description languages and things like that. And eventually that got by Adobe. Adobe bought it, right? So it was they sort of, like, the best. I find the best companies are the ones where you got to be deep in the market talking to the customers, and you just can't sort of knock on a door at, like, a big company and say, "Hey, let me talk to the people who are having all the problems and what their problems are." You can never do that, because no one's going to let you in the door. But if you have a product that makes some kind of sense somewhere, and you get in the door, and we've done this with we did this with our I think our fintech company. We'd go and say, "Hey, we got this fintech solution," and they go, "Yeah, we love it, and maybe we'll buy it, maybe we won't. But you know what we really want is this." And we go, "Well, yeah, well, we don't do that, but it's good to know." And you go to the next customer, and then and all of a sudden you get like 6 out of like 8 customers saying, "Maybe we'll buy your software, but what we really want is this." And then that's when you've got a great market, because it's a thing that no one's really heard of, but everyone wants it, but no one knows that everyone wants it. And it's like a wide open thing. And all you got to do is build it. And it's not even going to be complicated or anything like that. It's basically like a little printer spooler. It's like not something. So anyway, you build it and then you make it, you can sell a ton of it. And those kind of pivots are the ones that I really like, where you use your first company to get in the door and then you really listen. That's the other thing too, is a lot of people are going to be pitching their product and they're not going to listen to what the market wants and what the customers want. And so you got to, part of the meeting is like, so what are your problems? What are your issues that you're having that you need solved? Like, that question when you're visiting customers is missed usually, but that's one of the most valuable things you can do, is building a business that way by pivoting.
That's absolutely brilliant, because as you start to think about your initial product you're getting in the door, it's like a wedge. They've opened and wedged the door because there's some interest, but it's not really solving their problem. And if you spend some time asking the right questions and listening, you might have to build out a whole new product. But if you hear it once or twice, there's an opportunity. And I think we're afraid that I spent all of this money on this initial product and that this is the winner, this is the money, this is the driver. And really all you had to do was listen to this. To your point, there was a spooler they could have built, and that became their business. They dropped the R&D money that they spent on that initial product because that got them in the door, which is all that it mattered. It paid for itself. It did its job. It got you in. It got you listening. It opened the door. It reminds me of this company that was doing automated garbage removal in when I was in Qatar. And the young guys went through the whole process. And I was like, this is great, but, and I'm challenging them on the way they think, is this really the solution you're getting at? There was some guys changing the garbage. I said, look, they're putting everything into one bag. Your solution was that you had to put it in here and you're going to have some robots to clean it out. And I said, there's a budget. Let's say the budget's $10,000 a day. Are you going to be able to get that budget with your product? And if you're able to do this, are you really going to get anything of that value? You have to listen to what they're looking for. They don't want it separated. They don't want to do any work. They just want that garbage out of there. So you're tackling the wrong problem, but you got to go and bug them to find out what the problem is that they really are having. And that takes time, but it also means that you have an in. The innovation you've built is cool. That'll get you in the door. Now you got to listen to what the real problem is and pivot right away. And they were like, wow, I never thought of that. I just want to sell this product because we put all this money into it. I'm like, it doesn't matter about that. Forget about what you just did. It's what you do next.
Yeah, for sure.
That's and I think as you kind of talked about it, there's a lot of business sense, and I'm going to assume there's a missing business sense because you don't have it. You're young. You haven't been working in big corporate. You mentioned that you went in and said, I got to work in big companies. So you learned how to do critical thinking because you were in these big companies. And then you took that into the startup space. And now today, as an investor, you can kind of create this overarching view of the world on how these different facets works and what you're looking for from that startup and how you can generate that outcome by coaching these little pieces that are going to help you get the right outcome and them to find the right space in their business. So you mentioned that there's a lot of learning and things that you've done. And just before we end this segment, because you focus a lot on deep tech and you're working with a lot of PhDs, a lot of smart people, how do you define what deep tech is versus is AI part of your deep tech? Is tokenization, is blockchain? Like all of these things are high encompassing words. Are they really the deep tech of things that you're looking for? And then what really defines on how you want to make that investment in a deep tech? Is it, this is going to take 20 years to build, that's the type of company I'm going for? Or it wants to be back end controlling the world? Is that this type of companies you go after? What is that definition of deep tech for you?
Yeah, so deep tech investing is a little different from what I call regular investing, because we didn't really have any deep tech investing in Canada when we started in 2020. We were the first deep tech focused firm, venture capital firm in Canada. And what we've learned is, we're both engineers, but we have our own personal expertise. I did an AI course at Stanford when I was angel investing, just because everyone was talking about AI and I needed to know what it really was. And so I have some expertise in AI. I have some e-commerce expertise. I have solar tech. I have a few And then medical tech, I've done a few of those. So I've gone down the rabbit hole in my, investing career, learning about. That's the beauty of venture capital, is you get to learn about all these things. When someone comes along, you get to go deep. And so I've learned through my venture investing career certain things. My partner Scott's learned his certain things. But what we realize is, all of the deep tech things that are out there, they're all really niche. Like, it could be a combination of some solar and some electronics, and we're not experts in the combination. We may know a little bit about, but every deep tech venture is super niche. So the way you have to build a deep tech venture firm is, you got the two partners who are fairly generalists. And then what we've done is you hire these experts in all the little niches. So we have a chemical engineer now. We have a compute guy who wrote assembly language when he's a computer guy. We've got, and then we have, we're bringing out a life sciences person to help with the med tech stuff. And so we don't have the full deep tech thing, filled out yet, but we've only got one fund. So we've just filled a few niches. So we're really good at right now AI. So we've done 3 or 4 AI companies. We're good at advanced materials. It looks like 3 or 4 advanced materials companies, like electronic yarn and coatings for batteries and things like that, because we have a good chemical engineer on board and he can help us with those decisions. We have an engineering guy doing, magnetic braking systems for airplanes and trains and things like that. So we have those, and we have that expertise, mechanical. So we define it for our firm with our advisors, what we have expertise in. We have no expertise. I mean, not really expertise in the blockchain. So, and we haven't figured out anything to invest in there. We have no expertise in quantum, so we're not really investing in that area. We look at that kind of stuff, but we're not really investing. It's a little bit different way of building an investment firm, and it takes a little bit longer. So the interesting thing about deep tech is, because it's hard, a lot of hardware, or even AI takes a long time. There's a slower ramp up to money. So we have to watch for that, because, we don't want them to burn through money. So we have this thing we say called clear path to revenue. So we don't do science projects. Some guy's got in a lab and he's got this cool tech and it's kind of really interesting and intuitively it's going to change the world. But is there a clear path to revenue? Well, we don't see one just yet. So it's a bit too early for us. So what we like to see is prototypes done, pilots in the hands of customers. And then the customer can sort of, maybe pre-revenue, maybe a year pre-revenue. It may take a long time to do the pilot studies or whatever, but we can say to we can ask the customer, hey, if this thing works the way you want it, expect it to work, will you buy it? And they say, yeah, we'll buy it. So then we take the technical risk, which is different from other venture capital firms who don't take technical risk because they don't have the expertise on board. And so it takes longer. So you're sitting there, your total value, TVPI or whatever it's called, the return, the value of your thing stays low longer than a typical VC firm. But once you get in the market, the whole thing flips, which I love, is like a SaaS company gets in the market. Everyone sees it's going to be making a lot of money. Everyone jumps in and copies them. Microsoft, they buy, or the big companies, if there's money there, they're going to just go and do it because, it's software, you can do that. With hardware, you usually enter the mix with a great order and it's all patent protected. So then, no one's going to jump in and copy you. Well, depending on the deep pockets, they'll come and breach your patents. But then you get this moat that you arrive in the market with. So you haven't made, the company value is not high for a long time, but as soon as you get into the market and it's being accepted, company value goes really high very quickly. So then you shoot through the line of the other companies that are growing their business revenue wise.
I love that. And I like the fact that you're analyzing that clear path to revenue. So you're aiding them in the sense that that this is a flat line for a couple of years, if not 5. And then you're figuring out where is this going to go after and how can we project that so that when you're making an investment, you can foresee how this is going to change your TVPI over the next 3 to 5 years, not over the 1 to 3. So you're not short-terming everything. Everything is a long-term build. So that's going to bring a lot of value. And then on top of that, you're bringing the expertise that fit into each one of your verticals, which then is going to allow for investors to have more confidence in how you guys are operating and making your investments because you've got an expert at the top and everything that they're doing, it's just funneling through all the different products companies that are coming through it, and they're getting the best to go in, and they're making that decision, and then you're backing that decision. So I think that's absolutely brilliant, a great way to focus on generating future value.
Yeah, I know. It seems to be working.
I love it. All right, well, we're going to switch into our next segment. We're getting on time, so it's a 60-second spot. So 60-second rant. I will turn the timer on, and when you're ready, you can kick it off, and we will jump right into it.
Sure. Timer on?
It's on. You're good to go.
So I'm at there's a conference in Toronto right now called the CIX conference. And there was a panel this morning called Made in Canada, which is great. So Ann Dickinson, what's her name? Women. Yeah. And a couple other people were on there. And it was a great panel. It was like, all the geopolitical stuff that's going on. We should got to focus on Canada. It's a great time for Canada. We got all the resources. We got all this kind of stuff. So my rant is kind of about how, sort of short-term thinking people are in general. I guess that's my rant. Things like countries and geopolitical and tariffs that Trump's talking about, and it's a super complex system. I like the word complex system is a word of the word from the art. And you can't predict complex systems. So people get up and they talk about it, and the media talks about it, and we might, the tariff thing might just disappear tomorrow. Like Trump might say, okay, I've backed down on that. It was a mechanism for something else. And everyone's got their hidden agendas. So the non-hidden agendas are what everyone's talking about, but no one can talk about the hidden agendas because they're hidden. And the hidden agendas are also complex systems, so no one knows how they're going to pan out as well. So, people just talk so much about, we got to support democracy, we got to support Canada, we got to all come together, and it's just like, just get to work. Like, it's like too much talking, too much like trying to predict the future, trying to make decisions on what to do. I don't know where my 60 seconds is, but there's that Chinese proverb where, the Chinese guy has a son, and there's a horse leaves, and the village says, oh, you lost your horse. And it's like, oh, feel so bad. And then the Chinese guys go, well, you never know what's going to happen. And the horse comes back with more horses. They got more horses. And they, oh, congratulations, you got more horses. You must feel great. Oh, I'm not feeling great because you never know what's going to happen. And then when the son is breaking in the horse, and then breaks his leg, oh, you must feel so bad. Your son broke his leg. Well, could be good, could be bad. And then now the next day, the Chinese army comes in, and they want to recruit, but he's got a broken leg, so he doesn't get recruited. So then he's like, oh, congratulations, your son can get recruited. Yeah, could be good, could be bad. It's like, you can make all these decisions, and you know what? You don't know the answer of complex systems. But I do like dynasty cycles where the U.S. is on a downturn because they've been going on for too long. Canada's on an upturn because we're newer. And I like that model. But I mean, you don't have to do very much. You just have to continue to plot away.
I love it. It's a great rant. And yes, you went over 60 seconds, but most rants never make 60 seconds, so it's perfect. I usually like to rebuttal, and I never can because I'm also all for what you're saying. The thing I would add into this is that one thing that, I was chatting about this earlier today is that, I was talking with my American colleague, and we were sharing beforehand. He said, oh, I'm so sorry about the U.S. I'm so sorry what we're doing. And I said, what are you apologizing for? This is fantastic. You're creating chaos, and you're actually forcing Canada. We're like a startup. We have one big partner, and that's you guys. And you guys are the only thing that generates any value for us. And now you guys are telling us you're not going to generate value for us, which means that we're going to fail, or we're going to have to start diversifying and finding other customers and figuring out how to solve this problem so we're not dependent on just you. And you guys are our war army. You guys are our protection. You guys are our financing. You guys are everything to us. We have nothing else. We never thought about outside the box. You're actually making us think and making us action something. We're literally in the best spot of our time of Canadian than we ever have been, because we have to do something.
Yeah, totally. Yeah, it's great. I totally agree.
So it's a different way of looking at it, but it's a problem we have to solve. And to your proverb, it's perfect. It's exactly the case. I can either took this as, oh my God, I got a broken leg, or I can look at this as, hey, I didn't get scripted, but now I can do something great. We have to figure out as a country what great things we can do and stop being so independent, to be dependent on one nation that's going to solve all our problems, and start being our own nation and having our own sovereignty. We are Canadian. We're supposed to be sovereign. Doesn't feel that way. So maybe today we will become that again.
That's right. Great.
So the last segment, which I'm going to plow through really quickly because we're at time and I want to make sure that we're appreciative of that. Just a couple of things, especially around the fun side and everything else. The way we do it is you pick one or the other, and we'll be real quick. When you guys are making investments, what do you look for? Founder or co-founder?
I don't know. What does that mean again?
You pick one or the other. Which one's more suited to your investment style from your venture?
Founder or co-founder? Like how we invest?
Correct. Do you prefer if you only go after co-founders, or do you invest in single solo founders in their business?
Oh, I see. Founders, I guess.
Unicorn or a 4-year 10x exit?
Unicorn.
AI or blockchain?
AI.
First money in or Series A?
First money in.
Safe or convertible note?
Convertible note.
Lead or follow?
Lead.
Verticals of focus?
Vertical.
Verticals of focus.
Oh, vertical to focus. AI, deep tech in general, materials, robotics, drones. Yeah.
Brilliant. Number of companies invested per year?
4.
Awesome. Favorite part of investing?
Learning new stuff.
Brilliant. 2 qualities a startup needs to stand out to you?
Good idea and smart founder.
Love it. 9. What piece of advice do you give founders 9 out of 10 times?
How to manage the business side.
Personal side. Favorite book?
Oh, I just read a cool book called The Art Thief.
Art Thief. Ah, yes.
He was a thief in Europe, stealing stuff from museums for like a decade and never got caught.
Love it. I listened to a podcast on it, so that's pretty cool. I didn't know there was a book. I want to read it now.
Yeah. And like I've done some treasure hunting and things like that, so I'm interested in that kind of like discovery and finding fun things, and yeah.
I'm going to dive into that. All right, favorite sports team?
Sports team. I watch a lot of cycling, so some of the European Tour de France teams probably.
Love it. Cake or fortune cookie?
Fortune cookie.
Superman or Batman?
Superman.
DC or Marvel?
Marvel.
Football or football?
Football or football? Oh, I see the two different. Fifth, on the fence on both of those.
Fair. Elon Musk or Oprah Winfrey?
Ooh, those two? Musk.
All right. Big Mac or Chicken McNuggets?
Big Mac.
What is your superpower?
Pattern recognition.
I love it. All right. Well, I'm going to say thank you very much, Colin, today for all of your time. I know we went a little bit over, but it was really awesome to get to dive into all of your past and all the great things that you've accomplished and the things that you're working on and going to continue building in the Canadian and global market. But we appreciate all your time, and the way we like to end our show is we like to give you the last word. Any last things you want to share to investors or startups, I turn it over to you. And of course, please share how people can get a hold of you.
Yeah, I mean, nothing for the last word, really. I think we covered a lot of material. Colin Webster, colin@risk.capital, email. Feel free to send me a note, or I often give people a lot of advice regardless, even though, it might not be able to help invest, but I love helping entrepreneurs, and that's, forefront in how I live my life. So feel free to reach out, and happy to talk to anybody.
I love it. Thank you very much, Colin.
Yeah, thanks a lot. Great meeting you. Yeah.
That's a wrap for today. Next episode, Cameron Atlas returns for his second time on the podcast. Get ready for another powerful conversation.
Like it was the year of subtraction rather than the year of amplification. I'm like, what is going on?